Tax collected at source. So tax deducted at source while making the payment. Okay, amount is deducted for the taxation, balance is remitted. The payee can later adjust the TDS while paying the tax. But in case of TCS, while making the payment by the payer, the payee collects some additional amount for the tax. That is called TCS. Tax collected at source. For example, A buys a car from Maruti Suzuki dealer. The car may be say 20 lakhs. While making the payment for car, Maruti Suzuki dealer will demand for tax also. Is that okay? So maybe 1% here. Okay. TCS for sale on motor car. If the motor car value exceeds 10 lakhs, 1% sale consideration will be collected as TCS. So 1% on this being only 0.2. So overall amount collected by Maruti Suzuki being 20.2 lakhs. This 0.2 lakhs is deposited with A's tax. A's tax. Is that clear? Now, while making the payment, tax payable from there, advance tax paid if any, TDS deducted and deposited, TCS collected and deposited by the payee, then all the three will be subtracted, balance will be the ultimate tax payable here. Clear? That's the logic. For the 20 lakhs, 20,000 TCS is not at all a matter. Collecting 1% will have no impact. But anyhow, the reason of collecting this is nothing but it's an intimation by the seller of the car to the government of India that A has purchased a car worth rupees 20 lakhs. Naturally, what happens, if he files the return of income stating that his income is only 2 lakhs or not taxable income, then he may be getting caught. Is that okay? That's the main logic behind. Almost 20 lakhs he has purchased spent for purchasing the car means definitely his income should be higher enough. Then definitely there should be income in the return of income matching for this spending, else there may be inquiry. Okay, that's a reason why the TCS is there. The TCS is very, very small number and small provisions. Right. Now, tax collected at source, especially the rates applicable being these items: alcoholic liquor for human consumption. If the alcoholic liquor sold for human consumption, apart from the sale value, 1% extra collected for the TCS. If the purchase is for manufacture of any articles or power generation and other purchase, and the purchaser has given the declaration, then TCS will not apply. If he purchases all these things for subsequent manufacture, of course TCS is not applicable. Usually it may be for the end consumer, the TCS will be applicable at the rate of 1%. Tindu leaves, the cigarette and other cigars, 5% TCS will be leviable. Timber obtained from forest lease. You got the forest land in lease and where you can get the timber from the forest, and while selling this, you have to collect a 2.5% extra for the TCS. Timber obtained by any mode other than forest, and any other forest produce, not being timber or tent leaves. For all these things, it's 2.5. Otherwise, simply timber and other things from forest other than forest, all these things are taxable. The rate of TCS applicable being 2.5%. From manufacture, non-usable assets, such scrap you get, if it is sold, then TCS will be applicable to be collected from the payer 1%. Minerals being coal, lignite or iron ore, while these goods are transferred, and 1% TCS will be applicable. Is that okay? Now, This is 206C class 1A. Now we'll go for 1C. 1C is all about TCS to be collected for lease of parking lot, toll plaza, mining and quarry. Here the TCS rate being 2%. Okay. So when you are going to deposit that, either debit or receipt of amount, whichever is earlier, will be considered here. Their credit or payment, whichever is earlier, here debit or receipt, whichever is earlier, will be taken in case of TDS, right? So you have to understand the difference between these two. Now, licensor, licensee. Okay. So licensee and licensor. License is given for what? Collecting the toll, parking lot, toll plaza, mining and quarry and all. So now the licensor can collect this, but he is not being individual or half, not falling under section 44AB. Okay. So then this will not be applicable in all other cases, even PSU. Okay. Then automatically this condition will be applicable. 2% will be leviable. 2% will be leviable. Motor car 1%. Provided if the car value exceeds 10 lakhs. That too individual sale. Means if the car is purchased from the manufacturer by the dealer, will the TCS applicable? Definitely not so. If you are being the end consumer retail buyer, then TCS will be applicable. Any person except the same 44AB, that condition you have to remember when last previous year. Any person, buyer being any person, retail sale not apply if sale from manufacturer to dealer. If the sale is from manufacturer to dealer, the dealer is subsequently is going to sell. So manufacturer is not collected TCS. But dealer has to collect the TCS once he plans to sell to the end consumers. And the TCS rate being 1% applicable only if the motor car value is more than 10 lakhs. TCS collection on receipt of consideration. While receiving the consideration, you have to collect this one amount also along with. And if the car and whatever it may be, vehicle purchased by central government, state government, PSU engaged in the business carrying passenger, embassy, consulates, and commission like and local authority, of course, for these things, TCS will not be applicable. TCS is not applicable. Now 206C1G. 206C1G. Okay. TCS related to tour packages, where you are making the payment for overseas for tour purpose. Okay. Now, the payment is done to whom? Authorized dealer. Okay. Or you can make the payment to seller of overseas tour packages. Okay. So, tour organizer or tour operator, Mr. A, enjoys the tour with this tour operator, and for that he makes a payment. Okay. Any remittances for foreign tour, and automatically TCS will be collected. Who collects this? Tour operator collects and deposits. Mr. A makes a payment of say 10 lakhs and the TCS is also collected, and 10 lakhs is the sale consideration of the tour package, and TCS will be deposited in the name of Mr. A himself. Now, here 7 lakhs, remittances up to 7 lakhs, 5% will be TCS rate. If it is more than 7 lakhs, then 20% thereafter. For what? Tour program packages. Tour program packages, where the amount is for purchase of an overseas tour program package. If the remittances is up to 7 lakhs, 5% will be considered as TCS, beyond that 20%. Okay. Now, instead of purchasing the tour program packages, you go outside India and get the foreign exchange from India and deposits there or spend there. Up to 7 lakhs in aggregate nil. Remittances above 7 lakhs in aggregate 5% for education or medical remittances. In case of educational loan, 0.5%. You borrowed and you supposed to remit foreign country. It is not for the tour program. It's other than that, any remittances. 20% for purpose of other than educational and medical treatment. For education, 5%. For education loan, 0.5%. For other than these two, 20% TCS will be deposited. Exemptions applies if TDS is deducted or if the buyer is government embassies or notified entities. If there is TDS applicable for this, of course, you no need to follow the TCS. For a scenario where we have the TDS as well as TCS, first priority goes to TDS. Once TDS is over, TCS is not applicable. Clear? That's the general definitions. Authorized dealer is nothing but the person who is authorized under FEMA. Overseas tour package is nothing but includes travel, lodging, and related expenses for the foreign tour. Is that okay? And 206C 1H. 1H. Okay. Now, C, buyer and seller. Okay. If seller sends the goods, for that buyer makes the remittances. And the value is around 60 lakhs. Okay. Provided the buyer's last previous year turnover is more than 10 crores. Then he is supposed to deduct what? TDS. Under section 194Q. We have already studied 194Q. Is that okay? You just go and recollect the TDS 194Q. Q for goods like I asked you to memorize. Is that okay? Now, so we referred this earlier. Buyer of goods, gross receipt is more than 10 crores in the last preceding financial year. Then, if the sum exceeds 50 lakhs, 0.1% TDS will be applicable. Okay. So, at the rate of 0.1% TDS is applicable. Now, if his scenario is not falling under this case, last previous year, but seller's last previous year turnover is more than 10 crores. In this case, what happens? While collecting the payment 60 lakhs, he collects for TCS also. Okay, under section 206C subclass class 1H. Either this will apply or this will apply. First priority goes for the TDS. If the TDS could not be applicable, then TCS will be applicable. Seller's turnover in the last previous is more than 10 crores and buyer buys the goods in excess of 50 lakhs, then automatically 0.1% TCS rate will be applicable. And TCS will be collected on receipt of the consideration. Note, TCS under section 206 class C1C is not applicable if TDS under section 194Q is applied. There I have stated that if TCS is applicable, then also give the priority for TDS only, not TCS. The same happens here also. But anyhow, this will not be applicable for the purchases, buyer being the central government or state government, embassy, consulate, commission, and local authority, import, export of goods, payment from non-residents for fuel filling for airlines and all. In these cases, this TCS will not be applicable. Even of course, you can pay lesser tax if you are getting a certification from the AO. Okay. So same way we can escape from TDS. Similarly, TCS can also be escaped from getting a certification from assessing officer. Now, TCS return shall be processed and following adjustments to be made. So you have to, once you are being the TCS collector, all the collected information you have to report to the government. So that is nothing but a filing of return of income. Like here, you are going to file the TCS return. The TCS return while you file, the government will, means the income tax department will first check for arithmetical errors or if there is any incorrect claim in return. Thereafter, intimation shall be sent to the collector specifying the amount of demand or refund. So they will explain all the things. Intimation shall be issued within 1 year from the end of financial year in which quarterly return was filed. Now, in the absence of PAN, usually TCS rate will be whichever is higher of 2 times of TCS or 5%. In case of 0.1, then 2 times of this being 0.2. Some case like 10 to leaves and all 5%, then it may be double 10% or 5%, whichever is higher will be taken. Right, whichever is higher will be taken. But for 206C class 1H, this scenario, that goods scenario, TCS rate is whichever is higher of 2 times of TCS or just 1%. It's not 5%, just 1%. Okay. Now, higher rate of TCS for non-filers of income tax return. So the person who spends, no, he should be filer. If he is not filing the return of income, automatically the TCS rate will be higher. Okay. TCS rate, that already explained, no, the same you can use. However, the maximum rate of TCS shall not exceed 20%. Maximum TCS rate should not be more than 20%. If you think in this case, other than education and medical treatment, TCS rate is 20%. If you multiply with the 2, it's 40%. No. Anyway, there's an upper ceiling, 20% is the upper ceiling. Beyond that, TCS will not be collected. Is that clear? So if the higher rate is supposed to be collected, TCS rate into 2 or 5%, whichever is higher will be taken. But it will not be applicable for the quantity case, goods purchase case, which is 0.1 into 2 times or 1%, whichever is higher will be taken. The maximum ceiling should not go beyond 20%. While calculating TCS, we have to calculate the value including GST. If the car value being 20 lakhs, GST being applicable GST being 18% means around 1.3.6 lakhs and 23.6 lakhs. On this only you have to calculate the TCS. Okay. Now 194O and 194Q. If these two are applicable, O is what? E-com operator. This is nothing but goods sold in excess of, okay, 50 lakhs. Then 194O will be applicable. 194Q and 206C1H is applicable. Between these two, the first priority goes to 194Q. Similarly, 194Q and rest of the other TCS is applicable. Then you have to follow the other TCS aspects. Only for this 194Q will be applicable when we have two aspects. Clear? Hope you will be now able to understand. Now, most of the cases TCS, this is the general one. Seller being any person except he is being individual and half not liable for tax audit in the last previous year, and buyer could be any person except this one. This will be applicable for all the cases. I just explain all these cases here. Only these provisions are applicable for the TCS. Beyond that, nothing is there. No need to worry about that. So it's one of the simplest small topics. Now let's move on to the next topic: provisions for filing of return of income. Okay. So we have to cover up these sections under this chapter. Now we have to understand 5 types of filing of returns of income. First one is section 139 class 1. Very often I refer this section here or there in most of the cases, like payment should be before the due date of filing of return of income, mentioned under section 139 class 1 like. So that will be now covered here, section 139 class 1. Okay, it's a compulsory filing. Okay, compulsory filing of return of income. Who has to pay, file the income, return of income compulsory? That is covered under 139 class 1. I don't have income. If I am having taxable income, definitely it will fall under 139 class 1. Apart from that, some other category also will fall under section 139 class 1. We will be discussing that. And I don't have income, sir. Do I want to file the return? I have the loss only. If you have the loss, of course, you need to file the return of income to set off and claim it later on. Three kinds of losses. One is what? PGBP, another one is capital gain, another one is owning and maintenance of the resources. But two losses, if supposed to carry forward and set off like depreciation and the income from house property, you no need to file the return of income. So for claiming these three, you need to have your return of income to be filed under section 139 class 3, return of loss. The due date mentioned under section 139 class 1 is missed. Can I file even after? Yeah, of course you can file even after also. The extended time is called belated return. If you are filing within the late time, is called belated return. At what time you can late and file the return will fall under section 139 class 4. Is that okay? You filed and later on you came to know some items missed or calculated wrongly. Can I revise that? Of course you can revise that. That revision can be done within a due date, which is called revised return due date under section 139 class 5. So these are the four aspects I am going to cover first of all. All these four will be called as filing of return of income. Is that okay? Thereafter, what about the PAN and the Aadhaar number? Whenever you purchase some item, okay, business means the seller will demand, give me your PAN. If you go and purchase a car, then without PAN you cannot purchase. Similarly, if you want to purchase a AC and other thing, costly AC, immediately they will ask about the PAN. Currently, for the business purpose, if you supposed to purchase the car, even AC or an item costing rupees 50 or 70, they demand the PAN or GST number and all, okay, TIN number and all. So, because of asking this one, automatically, based on that, it is intimated to the government. Once it is intimated to the government, what happens? While filing the return of income, it is easily tracked. For that, quoting of using the PAN number as well as quoting of the PAN number is must while spending some cases and other also. Right. Sir, I cannot file the return of income, sir. Is there any specialized person to file my return of income on behalf of me? Yeah, of course, you can go to the chartered accountant. But he demands more fees. Then automatically what happens? There may be some tax return preparer also helping you to file the return of income where audit is not required. In the absence of audit, you can file the return of income through tax return preparers. All can write an examination, qualify the tax return preparer's status, and you will have a number similar to CA, chartered accountant, cost accountant numbers you will have. Using the number, you can file the others' returns also. Taking the responsibility of that filing is yours. You filing, okay? Tax return preparers. But of course, you cannot do the audit. You cannot do the audit. And after filing the return of income, okay, I state that my income is 5 lakhs or 6 lakhs, like intimated to the government under section 139 class 1 requirement. It is uploaded online. How can I say it is uploaded by me or some third party? Some third party, in order to punish me, he could have uploaded stating my income as 5 crores. Then department inquires, your income is 5 crores, where is the tax payment? Is it so? I don't know. Then there's a problem. Whatever the return you file, you have to confirm. The confirmation is called e-verification, verify. Currently, we can verify using the electronic mode itself. So, you will get the OTP, and based on that OTP for your Aadhaar linked number, you can confirm that you are the filer. Okay, that's called e-verification. Or you can earlier sign and send the document to the central processing unit in Bangalore earlier. Now, it's almost scrapped, like everything is now e-file verification. Right. Whatever the tax you pay, you can calculate the overall income and the tax on that yourself. That is called self-assessment under section 140A. Okay. Now, based on the updated return, you can make the tax payment, and also this whatever the list you have to understand. Now, let's start with the return of income under section 139 class 1. Who has to file the return of income compulsorily? First, we'll see the due date. In general case, requires no audit. July 31st is the due date. If your accounts required to be audited under section 44AB, then automatically the deadline for filing the return of income being October 31st. Or assessee being the working partner of a partnership firm, when the partnership firm required to be audited. If the partnership firm is supposed to be audited, how the partner's income can be found out without knowing the profit from the partnership firm? So though my income is very lesser, my income is not required to be audited, but partnership accounts to be audited. After that only I can incorporate my details, means my cutoff date also, the partner's cutoff date also be October 31st. Okay. And if I want to incorporate some transfer pricing report as per section 92E related to the foreign transactions, if I am buying and selling the commodity from one country to the other country, and transfer pricing also to be reported, in that case still delays, right? So we extend one more extra month, October, instead of October it's November 30. July 31st in general case, audit case, and the working partner for a partnership firm where the partnership firm is supposed to be audited will be October 31st. And when we want to incorporate some foreign transaction, transfer pricing report under section 92E, then November 30 will be the due date, and other cases July 31st. Now, who has to file the return of income, sir? First one, companies, partnership firms and LLP should always file the return of income whether they make the profit or not. Companies, firms and LLP should file the return of income whether they make the profit or not. In case other than companies, firms and LLP, what happens are other cases, other assets, individual and half. If their gross total income exceeds basic exemption limit, means before these deductions, 54 series deductions, before claiming the capital gains deduction, if your gross total income exceeds the basic income, basic exemption, then you supposed to file the return of income. Sir, I don't have the tax liability, sir. Do I want to file? Yes, of course, you need to file the return of income only if you are crossing the basic exemption limit. Basic exemption limit is crossed 2.5 lakhs, but up to 5 lakhs, you don't pay any tax, right? Though you no need to pay the tax, yet of course you have to file the return of income here. Clear? And I'll go for the fourth one. Third one, we'll see that later on. Fourth one, any person who during the previous year deposit in current account or bank or cooperative bank in excess of 1 crore in aggregate. Okay, if there is a deposit in current account more than 1 crore in aggregate, it's not single deposit. So the year's complete deposit is more than 1 crore in a year, he has to compulsorily file the return of income. Suppose if it is not being current account, if it is being savings account, even deposit being more than 50 lakhs should compulsorily file the return of income. And in case of business where the turnover is more than 60 lakhs, stating that though my turnover is more than 60 lakhs, my income is zero. So my taxable income is less than basic exemption. Sir, do I want to file the return of income? Yes, because your turnover is more than 60 lakhs. If you are being the professional, if your gross receipt is more than 10 lakhs, you have to file the return of income. And the TDS and TCS collected in your account for you more than 25,000. In case of senior citizen, it is increased to 50. You have to file the return of income. So if you go and verify what is the TDS and TCS amount as per your report, if that value is more than 25,000, compulsorily you have to file the return of income. And if you are spending the money for the foreign tour, where the spending is more than 2 lakhs, yes, of course, you have to file the return of income. Electricity consumption in your home per year exceeds 1 lakh, of course, then also you have to file the return of income. Okay. And fulfills other condition if it is prescribed now and then, you have to follow filing the return of income mandatory. So, companies, firms, LLP compulsory for all other assets is based on the gross total income. If the gross total income exceeds the basic exemption limit before deductions under section 54 series, right? You have to file the return of income, or any other person meeting any of the criteria, then he has to file the return of income. And ROR, resident, ordinary resident, who is not required to file ROI under section 139 plus 1. I am being ROR, but I don't want to file the return of income as my basic exemption limit is within 2.5 lakhs only. So it's not taxable limit at all. But that person should also file the return of income, okay, for as a beneficial owner of any assets located outside India or has signing authority in any account located outside India, then he has to file the return of income. Mr. A being ROR for the previous year. Though he is being the ROR, his gross total income is just 1 lakh. Then definitely not required to file the return of income. But he is being the beneficial owner for any residential house property in England, in UK. Okay, or he may have the signing authority for any purpose outside India, then automatically he has to file the return of income. Okay, as a beneficiary. Okay, beneficiary that I already explained during the income from house property itself. Beneficiary and registered. Registered means those assets will be in my name. Beneficiary means I am enjoying the benefits legally without having the registration in my name. So we are not talking about registered owner or registered signing authority. So what about the beneficial owner? Is that okay? Hope you will be now able to understand. These persons should file the return of income within this due date. Clear? With that, section 139 class 1 is over. Now we'll go this. Paras aged 55 years is a resident of India. During the financial year 24-25, interest 2,88,000 credited into his non-resident external account with SBI. Okay. And this is NRI account. NRE, okay. Non-resident external account. This will be called as NRE account. Actually, this NRE account is exempt. Okay. Under section 10, we have the exemption list where we have this one also. If time permits, have the glance over that. Okay, now and then you can remember 1 or 2. That's all, not more than that. 30,000 being the interest on fixed deposits was credited to his savings bank account during this period. He also earned 3,000 interest on his savings account. Okay, savings bank, he got another 3,000. Is Paras required to file the return of income? This interest credited in NRE account, usually exempt. Leaving the exempt income, the gross total income taxable in this case being 33,000, which is less than the basic exemption limit. So he requires no filing of return of income. So you have to understand this point here. Interest in NRE account is exempt. Right. What will be your answer if he has incurred 3 lakhs as travel expenditure? Travel expenditure means for foreign travel, US, if the value is more than 2 lakhs, then of course, whether he has income or not, definitely because of satisfying this criteria, he has to file the return of income within the due date. Requires no audit, so 31st July will be the cut-off date in this case. Clear? State with reasons whether you agree or disagree with the following statements. Return of income of limited liability partnership could be verified by any partner. Verification is nothing but, already told after filing, you have to confirm that you are being the verifier. For the limited liability partner, designated partner can be verifier, not others. This list is already available in the last page, I think. Right, I will finish up that so that you will be able to understand. So, under section 140, the return of income filed, is verified by whom? In case of individual, he or her himself or herself can verify. If he is not in India, then any authorized person on behalf of him can be the verifier. Or if he is not being incapacitated due to the minor age or insane and all, his guardian can verify this. Who has to verify or confirm that this is the filed by ourselves? So, first of all, he himself or herself, or Authorized person if he resides outside India. In case of incapacitated person supposed to be filer, then guardian, his guardian will be responsible. In case of Hindu undivided family, usually Karta or any adult members can sign if the Karta is not available in India or incapacitated. In case of company, three situations are there for the company. One is running company, running company. Another one is running company or actively running company. Another one is supposed to be liquidator. In case of running company, usually MD will be the signer. In the absence of MD or the company being non-resident company, okay, so MD may be foreigner. In that case, there should be a person holding valid power of attorney for signing purpose. He should file the return. He should verify. In case of the company under liquidation, now it is handed over to the liquidator who is responsible for signing this one. So e-verify will be done by the liquidator who is selling all the assets and settling the dues. As the company is supposed to be closed, the company entire assets and liabilities will be handed over to third party called the liquidator who is taking the responsibility of selling the assets and paying the various contributors. And hereafter, until it is completely closed, the filing responsibility is in the hands of the liquidator. Okay, hope you will be now able to understand. In case of partnership firm, usually managing partner. If he is not available, any partner. In case of local LLP, designated partner. In case he is not able to sign, then any partner. First choice goes to the designated partner in case of firm managing partner. In case of local authority, principal officer, political party, then chief executive officer. Any other case by any member in that case. And in case of AOP, any member or principal officer can sign. And once the return is filed, the signing authority should confirm that signed by he himself or filed by he himself by e-verifying. Should be verified within 30 days from the date of filing. Otherwise, it is considered as the return not at all filed. The filing becomes invalid. Okay, that filed item is not considered as filed at all. Clear? Hope you will be now able to understand section 140. Now get back to this. So, limited liability partnership will be fined by designated partner. In his absence only, any other partners can be allowed. Time limit for filing the return of return under section 139 class 1 in the case of Mr. A having total turnover 160 lakhs, where 100 lakhs received in cash for the year ended 31st March 2025. Whether or not apting presumptive income under section 44 AD is 31st October. See, if he adds the presumptive income, then up to 2 crores. Okay, up to 2 crores, he has the options to enjoy the 44 AD. If he adds 44 AD, then cut-off date for filing of the return of income being 31st July. If he is not apting, then he can go for section 44 AB and he has to maintain the books of accounts under section 44 AA. Maintain the books of account, get it audited. Is that okay? Is it okay? You can do so. Then in this case, audit required, no, automatically 31st October will be the cut-off date. So it is not always 31st October. Not apting, whether or not, if it is not apting, then this only this statement is correct. But whether or not means if he apts or doesn't apt, then he has to file the return of income by 31st October is incorrect. If he apts, then the date being 31st 7 or 31st October will be the cut-off date. Last return already told you. Okay, as per section 80, return of loss should be filed within the time for carry forward. What are the loss? Business loss, capital loss, loss from the activity of owning and maintenance of resources. It's not winning from resources. It's owning and maintenance of the resources. Two losses are not required to wait for the filing of return of income. Yet you can enjoy the set off and carry forward. Those are loss from house property and unabsorbed depreciation. But I failed to file within the due date. Can I get excused from the department? This is called condoned. Yes, of course. In case of genuine hardship, you can get excused from the department. If the loss supposed to be carried forward and set up in the subsequent period limited to 10 lakhs, the excuse is given by CIT or PCIT. Commissioner of Income Tax or Principal Commissioner of Income Tax. If the limit is anywhere between 10 lakhs to 50 lakhs, Chief Commissioner of Income Tax or Principal Chief Commissioner of Income Tax is having the power. More than 50 lakhs, then only the board can make the decision. Central Board of Direct Taxation can make the decision. Of course, it's a rare for inter-level. Only these points you have to be careful to understand. Clear? Now, 139 clause 4, belated return. As already told you, the cutoff date for filing of the return of income being 31st July or 31st October or 31st November, as the case may be. This is whatever the due date mentioned under section 139 clause 1. But if you miss to file within the date, can I submit bit late? Yeah, of course, can be submitted for the previous year 24-25. Assessment year falls under 25-26. Here the cutoff date for this case being 25. But if you miss to file this, then 31st December 25 will be the date within which he has to file the return of income. Late by this date. Not only that, section 144, best judgment assessment. So already told you, whatever the spending you do, crossing certain limit where the payee collects the PAN number and Aadhaar number, and using the TDS and TCS, everything is intimated to the government. So government will have all of your receipts and payment and income and expenses in their own angle using the data they got. Based on that, the income tax department itself values this is your income, pay the tax. This is called best judgment assessment. Okay, if the best judgment assessment done from the department side, probably on 15th December 2025, then the belated return should be whichever is earlier of these two. Though you have 31st December, if the department confirms their best judgment assessment much ahead of the date, thereafter you don't have the option to file your return of income. Is that okay? You don't have the chance to file thereafter. So if I don't file, no need to worry about that. They have raised the tax from you. You have to pay the tax, or then you have to defend your position later on with all the late penalty and late fee and interest and all you have to pay, supposed to pay. So the assessee failed to file a return of income within the due date, then he can file belated return before 3 months prior to the end of the relevant previous year. End of the relevant previous year is 31st March 2026. 3 months earlier means 31st December 2025. I hope you will be now able to understand that term. Okay, 3 months prior to the end of the relevant previous year. Okay, and or before the completion of the assessment under section 144, best judgment assessment. Between these two, whichever is earlier will be the cutoff date. Before that, you can file your even late return also. You miss the due date, of course, you can finish up your return within this date at least. Now, what happens if I file late? If your total income is less than or equal to 5 lakhs, then 1,000 late fee will be applicable. If your income being taxable, 5,000 late fee will be applicable under section 234F. Already you have studied this number, 234A, B, C, all are for interest. Apart from that, 234F fee is applicable, apart from that interest. And 244A, interest on refund is calculated from the date of filing of return of income. If there is a refund applicable, then that refund delayed means that interest is calculated only from the date of actual filing of return of income. You are missing your interest also. And if you are filing late, then automatically 234A will be applicable. So if you file after the due date for filing of return of income, then 234A will be applicable. From the end of the previous year up to the date of filing, 234B will be applicable. Failed to pay the advance tax during the end of previous year itself, 234C is applicable. We have studied that in the case of advance tax. Hope so you will be able to understand. Section 80AC, deduction under chapter 6A, income based deduction is not available. Income based deductions like what? QQB, RRB and TTA and all. So you have the savings bank interest and you can claim the deductions under section 80 TTA. those deductions are now you lost. And 80, as per section 80, the losses from business, capital gain, race horses cannot be carried forward. This is also one more difficulties you will be facing. In case of genuine reason, allowed to file ROI after the end of the due date of filing belated return also be possible. Okay, in some cases, okay, in condoned. Okay, you can finish off here itself. Hope you will be now able to understand in case of genuine reason. So with that, we have completed 139 class 1, 3 and 4. Now, the return what you have filed seems to be having some error. Can we rectify that? Yes, of course you can rectify. You can revise the return. If you are revising the return, what happens? The earlier return what you filed stands cancelled, new return will be applicable. How many times you can revise? Any number of times you can revise. What are the returns can be revised? The normal return filed under 139 class 1 can be revised. 139 class 3 loss return can be revised. Belated return also be revised, and revised return also be revised. All the returns can be revised, but the cutoff date for revision of this one is equivalent to the cutoff date for the belated return. What's that? 31st December 25 and best judgment assessment 144. Between these two, whichever is earlier. Revised return can be submitted any number of time. Okay, why? 139 1 regular, 139 class C3 last return, 139 class 4 belated return. Discover any omission, any wrong statement, then you can file the revised return. Is that okay? Revised return under section 139 class 5 can also be revised. This is the point you have to understand. Now let's see the question. Mr. Vinith submits his return of income on 12/9/25 for assessment year 25-26, consisting of income under the head salaries, income from house property and bank interest. On 21/12/2025, he realized that he had not claimed deduction under section 80 TTA. So he missed the due date. If he missed the due date, he cannot enjoy the deductions for any income related. So here 80 TTA is the income related, right? In respect of interest income on the savings bank account. He wants to revise his return of income. Can he do so? Yes, he can revise. He can revise up to 31st December of the same financial year. Would your answer be different if he discovered this omission on 21/3/26? So he discovers the next year, he cannot revise the return at all. Is that clear? First case is okay, next case not possible. What happens, sir, if I filed the return wrongly, because of that you violated or you have saved or cheated, whatever it may be, around 10 lakhs. And within 1 year you will get the notification. Not necessarily within 1 year, even it may go up to 5 to 6 years also. Within that period also you may get a notification. Okay, to revise and find out the tax and pay. So that time you are supposed to pay the tax. Okay, this is the case. Luckily, if nothing is there within the stipulated time, the date I've forgotten. Earlier it's 7 years or 8 years. Like now it's very lesser. It's out of my mind now. Within that period, if you don't get any notification from the department, you saved 15 lakhs because of non-payment. Department also not asked within that stipulated time. What happens? You can enjoy this yourself. Okay. Is there such chances available, sir? Try it yourself. First you earn 5 to pay the tax 15 lakhs. Then you can play with that. Okay, be cautious. Once they find out within that period, then tax is very high. 78%. Remember. Right. Now let's go for the updated return of income. Section 139(8)(a) permits individuals to file an updated return of income within 24 months from the end of the relevant assessment year, subject to condition. Okay. Ineligible returns cannot file for loss, decreased tax liability, increased refund. You cannot update your return. Okay. See here the previous year being 24-25, assessment year 25-26, assessment year ends on 31st March 2026. within 2-year end, 31st March 2028, you can update your return filed for this period. While filing, you cannot claim the, sir, I missed to claim the loss this year, I claim using the updated return. No, you cannot. Or the tax liability may be 10 lakhs by the time, but you want to reduce this tax liability to 8 lakhs to claim the refund. No, not possible. Or the refund you get earlier 2 lakhs, now you say, sir, it is not 2 lakhs, 3 lakhs. You cannot file the updated return of income. Okay. Why? See, you showed tax being 10 lakhs and filed and paid. Actually, tax is 15 lakhs. Within this period, you yourself be cautious, sir. I want to update and pay this 5 lakhs also, sir. Can I do so? Of course, you can do so. Provided, why do you want to do so? You got some tip, some ride is going to happen in your home. So, on 25th March, ride will come, sir. Be careful. Oh, is it so? 20th, you file updated return and you paid the tax. Will it be possible? No. Restriction. Not allowed if searches, surveys and specific notices under section. This one is applied. Okay. But without knowing this, if you do so, very happy. You can file the return for the additional income and pay the additional tax. Other conditions excludes pending assessments, prosecution cases, or information under laws like PMLA and Binami Act and all. Okay, in those cases, of course, you can consider for updating the return of income subject to some conditions. Is that okay? Now, so returns over. The returns what you filed may have some defect. That's called defective return. In case of defective return, how can we handle? Defective return. ROI is defective when the tax computation proof should be given. Not only tax computation, payment slips should be attached. And proof for TDS and TCS should be attached while calculating and giving. In case of your books of accounts to be audited under section 44AB, then auditor's report should also be attached. If audited, then attach audited P&L account and balance sheet. Okay, proof of payment of tax as required under section 140B. If the return of income is returned, furnished under section 139, 8A. So all these things, 8A means updated return. All these things should be attached. If anything is missed, then it is called invalid return. Automatically void ab initio means it is considered as you have not filed the return of income at all. Clear? Now, section 139A. 139A, PAN. As per section 139A, PAN, who has to apply for PAN, sir? The persons mandatorily apply for PAN being the persons whose total income in the previous year exceeds basic exemption. And he has to apply for PAN on or before 31st May. Is that okay? First case. Total income in the previous year exceeds basic exemption. What happens then? If the total income exceeds in the previous year, he has to file the return of income within 31st July, right? If he wants to file the return of income on or before 31st July, he needs to have the PAN number. So the moment he confirms that his total income exceeds the basic exemption limit, he has to apply the PAN before 31st May, at least 2 months ahead. So there will be processing time to get the PAN number allotted for you. So you finish up applications of PAN beforehand. Hope you will be now able to understand. Instead of that, if you are being in sales, okay, PGBP income, then 5 lakhs is the limit. Okay, 5 lakhs. When to apply? Before the end of the financial year, 31st March itself. Other than PGBP, it's 31st May. In case of PGBP income, if your gross receipt is more than 5 lakhs in the year, or it may supposed to exit, that's how you think, then you have to apply on 31st March itself. And the person who requires to file the return of income under section 139 clause 4A, like a trust, okay, and this is not applicable for inter-level, anyhow, understand. So we have section 139 class 4A, B, like for trust, political party. For those people, they have to file the return of income as per this section. Okay, 4A and 4B, of course, not applicable for the inter level, so I skipped it. And if you supposed to file the return of income being the trust as per section 139 class 4A, I should also apply for the PAN number before the end of the previous year. Right. Now, resident other than individual. Aggregate financial transaction of the previous year is more than 2.5 lakhs. Applied for the PAN. Financial transaction. Okay. The receipts and payment in our book is almost more than 2.5 lakhs. Then I have to apply the PAN number, whether I am taxable or not, or I am required to file the return of income or not. I have to apply the PAN number and get ready for filing the return of income if you are in need. Okay. Person being MD and director, partner, trustee, author, founder, karta, CEO, principal for all. Because of he is being the MD of a company, company should file and he should also file. Naturally, he should also apply the PAN as per the individual's provisions. What's that? Apply the PAN on or before 31st March, May. So most of the cases for the individual, like, right, the cutoff date for applying for the PAN being 31st May, 2 months ahead of filing of the return of income in non-audit case. In case of PGBP, cutoff date for applying being 31st March itself. Not only applying and receiving, and you have to quote PAN number. Where? With that income tax authority, while filing the return of income or correspondence with income tax authority, or for all the correspondence, you have to quote your PAN number. Like if you are drafting a letter, you will draft the from and to, like here also you have to draft your whatever the correspondence with the income tax department or authority, you have to use your PAN number. In all the challans for the payment also, this PAN number should be quoted. And in case of certain CBDT prescribed transaction, PAN number quoting is very, very important because of this reason. All the higher value transaction is intimated to the government. So that scenarios are listed here. So naturally, because of these scenarios, whatever the actions you are doing out of the list given here, automatically PAN number is linked. The information goes to department. Okay. So you can purchase the tea, snacks and all without PAN number, but all these things will come under this PAN. So you say that, sir, I may generate crores and crore rupees in cash or without any document, only in black money. You can keep all the cash in your room, bulk, can spend for purchasing tea and snacks and lunch. Sir, I am interested to buy the car, sir. Okay, you cannot buy the car because you have to immediately quote the PAN number. Once you quote the PAN number, it goes to the department also. Department will inquire, where is your ROI? Sir, I don't have any income, sir. I am a beggar, sir. My income is only 1,000 rupees per month, sir. No problem. You have purchased the car. I will come and inspect and inquire in your home. So naturally, you will be getting caught. Sale or purchase of motor vehicle or vehicle other than two-wheeler. Of course, happy you can purchase the cycle. Okay, two-wheeler. Sir, bike, sir. Okay, you can buy. But the bike should be not motorist, that what's that? Rider's bike. Okay. Opening an account with banking company or cooperative bank. If you want to open a bank account, you need to have the PAN number. And if you want to get a credit card or debit card, you need to have the PAN number. If you want to open a demat account for buying and selling the share, you need to quote your PAN number. Apart from that, if any payment in excess of 50,000 at any time, then automatically PAN number should be attached. For example, you go to the hotels and restaurants and pay the bill, that too in the form of cash exceeding 50,000 rupees, you have to quote your PAN number. Otherwise, it is not accepted. Okay, in a hotel and restaurant. Travel to any foreign country except travel to pilgrimage places, neighboring country. Okay, for the travel to foreign country, spending more than 50,000 by cash, except a pilgrimage place neighboring country like Nepal and Gurudwara and all the places, it's very closer, where it is allowed. And all other cases, if you are spending more than 50,000 in cash, you need to give your PAN number. And purchasing mutual fund units, you need to have the PAN number. A company or institution for acquiring debenture or bond, not only shares, debenture and bond also, you need to have the PAN number. Any bond issued by RBI, if you want to purchase, then PAN number is must. And with a banking company, whatever it may be, to open the savings bank by using the cash also, while depositing also, you need to have the PAN number. And bank draft, money order, banker's order, DD and all, for that also you need to have the PAN number. Bank for purchase of one or more prepaid payment instruments like a draft, for that also PAN number is required. And bank, post office, NBFC, Nidhi, where you are purchasing the time deposits which is more than 5 lakhs or more in a year, automatically you have to attach the PAN number. LIC premium excess of 50,000 in aggregate for a year, also you need to have the PAN number. So cash, in all other cases it's not necessarily being cash. Even in the account form you need to attach the PAN number. In these two cases cash, because most of the times the one word question asked in this way, amount spent for the pilgrimages around 1 lakh rupees to account pay check. Will it be required to attach the PAN? No, not required to attach the PAN. Anyhow, while opening the bank account, you have given the PAN number, right? So automatically, using that PAN, this data may go to department, right? If you are giving the cash, of course, there is no backup PAN number, so PAN number is must in the case of excess payment over 50. A contract of value exceeding 1 lakh for sale of purchase of securities. If you are buying and selling securities more than 1 lakh, then you need to attach the PAN. Sale of purchase by any person of unlisted shares also you need. Immovable property valued at 10 lakhs or more, you need to attach the PAN. And sale or purchase of goods or services exceeding 2 lakhs, okay, also you need to attach the PAN. Minor who entered above transaction should quote the PAN of the parent or guardian. In case of NRI, he has to furnish the photocopy of copy of the passport and all. So that's how the large spending are monitored by the government. Large spending, or you just think over what could be your expected spending if you have almost 2 crore rupees won in the lottery. 2 crore rupees. Just think over. At least you need to buy a car or home, or you can go for a foreign trip. For all these things, again, PAN is mandatory. Unless you quote to the government, unless you show your income to the government, you cannot enjoy all these benefits. Okay, clear? Even if you are planning to have a grand party in hotel, spending 1 lakh also not possible because PAN is required. Okay, if you want to invest anywhere to safeguard your money, also you need the PAN number. And purchasing house property beyond the 10 lakhs limit, you need to have the cash, means PAN number. So that's how large spendings are monitored. Large spendings are monitored, right? See, Mr. Akash has undertaken certain transactions during the financial year 24-25, which are listed below. You are required to identify the transaction in respect of which quoting of PAN is mandatory. Payment of life insurance premium 45,000. The premium exceeding 50 is required, so not required here. Payment of 1 lakh to a 5-star hotel for stay 5 days with family, out of which 60,000 in cash. If the payment being in the form of cash in excess of 50,000, then it's disqualified. You have to attach the PAN number. And payment of 80,000 by ECS through bank account for acquiring the debentures of A Limited, an Indian company. Sir, here there is no cashier. In this case, cash or account pay, whatever it may be, you have to attach a PAN number. Okay, that's why I told you here it's a cash and here it's a cash. In all other cases, the amount itself more than 50 means you have to show your PAN number. You have to show your PAN number. Payment of 95,000 by account pay check to Thomas Cook for travel to Dubai for 3 days visits with the relatives. Okay, here check. Okay, cash means more than 50. Okay, cash means more than 50. In these two places, cash being more than 50 requires PAN, otherwise not required. So here not required. Apply to SBI credit card. Yes, of course, you need to have the PAN number. Clear? Hope you will be now able to understand when you need to code the PAN number. Now, we'll go for this one. Interchangeability of PAN with Aadhaar number. Sir, I don't have the PAN number, sir. Can I give Aadhaar number? Of course, instead of PAN, Aadhaar number can be given. Instead of Aadhaar, PAN number also be given. Has not been allotted PAN but possesses the Aadhaar number, then has been allotted PAN and has intimated his Aadhaar number also, you can link PAN and Aadhaar. You don't have the PAN number, Aadhaar number can be linked. Given you have the PAN and Aadhaar, you have to link these two also currently. And section 139 class A, sorry, 139A is all about PAN, AA is all about Aadhaar number coding. When do you want to code the Aadhaar number? Whenever you want to get the PAN number allotted, you have to code the Aadhaar number. Mandatory for coding Aadhaar, for applying for allotment of PAN, or while submitting the return of income, you need to code Aadhaar. And I don't have the Aadhaar, sir. Then enrollment ID should be quoted. Once you apply for Aadhaar, immediately you will be getting the enrollment number. Until it is confirmed, you will be getting the, you may have the enrollment number. You can give that enrollment ID at least. PAN number allotted deemed to be cancelled in case failure to intimate Aadhaar number. Okay, so you have already PAN number. Sometimes later Aadhaar number should be linked with the PAN number. But most of the people fail to link this one. No, automatically the PAN allotted remains cancelled, and you can reactivate by paying additional fees of ₹1,000 at any time later. Currently, what happens now? Without Aadhaar, you cannot apply. Earlier, we had the Aadhaar, sir, PAN. Sometimes later only we got the Aadhaar also. So PAN and Aadhaar not linked. Suddenly, government announced that you have to link these two before you file the return of income. Started linking that. Still 1 year extension was given, thereafter also given. Finally they started charging ₹1,000. Now what happens, those who are not linked to these two, their PAN number becomes inactive. So the moment he connects these two by paying the fees of ₹1,000, then automatically it's activated. You cannot keep two numbers, two PAN numbers or three PAN numbers. You are eligible for having only one PAN number, one Aadhaar only. If you have the two Aadhaar or two PAN, it's cheating, right? Okay, right. This provision does not apply to whom this linking is not required. The person residing in the states of Assam, Jammu and Kashmir and Meghalaya. Or if he is being the non-resident, how will he have Aadhaar? So definitely not required. If the age is more than 80 years, then also not required. Okay. And not being the citizen of India, in these cases, Aadhaar coding is not mandatory. Aadhaar coding is not mandatory. Is that okay? Now let's go for tax return preparers. Okay. Now, CBDT may notify specific person to file ROI through TRPs. Okay, who are the specific persons? Usually other than tax audit persons, right? Through TRPs. The TRP shall assist the person furnishing the return in a manner that will be specified in a scheme and shall also affix his signature on such return. Okay. He can affix, who is he? TRP can affix his signature, stating that I filed on behalf of this assessee. The tax return preparer can be individual, not being legal practitioner, chartered accountant, or employee of a specified class of persons. Even officer rank, scheduled bank with which assessee maintain an account. These cannot be tax return preparers. Okay. And specific class persons means the person who is required to file ROI other than company, persons whose audit not required, whose accounts requires no audit. Okay. Company mandatorily what happens? To be audited, right? As well as other persons crossing their income 1 crore, or in case if he is not applying the percentage taxation 2 crores, in some cases 10 crores. Only then the compulsory audit there. In the case of compulsory audit, auditor's signature is must. For other cases, tax return preparers can do. So if I am not being the tax return preparers, can I do so? If you know that idea, you can help the others, but can be signed by the individual tax filer he himself, not being the helper here. Okay. The scheme provides the following: the manner, period of TRPs are authorized So TRPs are given authorization to help for this for 5 years or 6 years, like, and it may go for the renewal. The educational and other qualification of TRPs being graduate, CA, and CMA. Okay, these may be the qualifications. Okay, the code of conduct and duties for TRP also be available here, so you have to follow that strictly. Right. Mrs. Heatle, an individual engaged in the business of beauty parlor, has got her books of account for the financial year ended 31st March 24 audited under section 44 AB. Her total income for the assessment year being 6,35,000. She wants to furnish the return of income for the assessment year 25-26 through tax return preparers. So audited, but income is very lesser. No audit not required. If audit not required, then automatically she can go for TRP also. Audit not required. Okay, if it is audited, then you can route through auditor itself. But audit is not required here. Audit not required means TRP will help for filing the return of income. So after filing the return of income, you have to confirm. That is called verification. Earlier it was a postal based verification. Now it's a e-verification. Even sometimes you can have the DigiSign also. Okay. So section 140. Now we'll move on to the self-assessment. Self-assessment. Assessing myself. What's my income? Amount of tax already paid. TDS, TCS I paid can be claimed, and if I'm eligible for relief, I can enjoy. Any tax credit claim to be set off in accordance with the provisions of 115 JD, and interest applicable. All these things are calculated and state this, and you can file your return. This is called self-assessment, where the tax is payable on the basis of any return required to be furnished under section 139 after taking into account. These are considered, and he can file himself under section 140A. Self-assessment. Self-assessment is not final. Anyhow, department will assess and confirm. So you have to wait for that, right? The payment of tax on updated return filed under section 139 class 8A. Already I told you, know, updated return can be filed within 2 years from the end of the current assessment year. By the time also you can pay. Tax payment requirements. Tax payable includes amounts adjusted for advance tax, TDS, TCS, foreign tax, and everything. Additional income tax of 25% if ROI is filed before 12 months from the end of the previous year, else 50% of the unpaid tax and interest applies. So if you are filing the updated return, automatically what happens? You have to pay 25% additionally. If your tax comes around 10 lakhs, okay, you paid only, stated and paid only 5 lakhs. And in updated return, you want to file another 5 lakhs additionally. In this case, you have to add 25% extra. So 6.25 lakhs you have to pay. Is that okay? Within 1 year. After 12 months, you have to add another 50%, 7.5 lakhs you have to pay. Okay, your tax will be inflated to this extent. Apart from that, interest is also applicable. Interest under section 234 A, B, C will be calculated because you might have paid the advance tax based on 5 lakhs, the actual tax paid. Now you have to recalculate based on the 10 lakhs. So interest for the 2 years also be payable. Right. Guidelines for difficulties. Any difficulties is there in CBDT may give the guidelines. Restriction. Tax includes cess and surcharge. So that will also be included. Updated returns are ineligible for refunds. You cannot claim the refunds, or you cannot claim the reduction of the liabilities and increase the loss also. Okay. So it's nothing but you made a mistake and you want to commit, accept that mistake and pay the tax. While paying, you are paying the penalty also. Else, the department may take the actions, right? Hope you will be now able to understand. Okay, so with that, this component is also over. Provisions for filing of return of income is completely over. Clear? Computation of total income of individual, you know. I request you to go and study from CA Institute material. I have given the videos also. You can go and watch that video. The comprehensive illustration, 3 or 4 illustrations are there, where it includes PGBP, income from house property, capital gains, all in single illustration. That's what about the I have not included here. Okay. Here I am going to give a small briefing about AMT. I think AMT is not applicable for CA. Anyhow, just care about a few minutes here. Computation of total income of individual. We have been given AMT here, alternate minimum tax. Only one aspect, then the chapter is over. I will finish up with this. AMT, alternate minimum tax. See, you know that section 35 AD. Also, you know section 10 AA. Section 35 AD is a specified business where you can claim 100% deductions for the capital expenditure you incur. Under section 10 AA says special economic zone for export, any profit generated due to the export will be exempted 100% for the first 5 years. Next 5 years 50%, another 5 years 50% subject to a condition. That will fall under section 10 AA. Government gives lots of deductions to motivate to invest in cess business or 35 AD business. Because of these kinds of benefits, and we have 80H, 80 RRB from here to here, other than ATP, cooperative society. Okay, 80H to 80 RRB, QQB, RRB, you might have studied. Other than that, 80H, IA, IB, all these things are now today outdated. So, least bother about that. Okay, anyhow, all the assessee enjoying the benefits under section 80 IA and all can enjoy the benefit under section 35 AD. Because of these sections, you can claim lots of deductions. You made a profit of say 100 crores. Because of these two reasons, you deducted completely, your taxable income is 0. Actually, you have to pay tax at the rate of how much? 30%. Because of enjoying these benefits, section 10 AA, 35 AD, your income is 0 after the claiming the deductions. Okay. What happens, Reliance enjoyed no tax for almost 7 to 8 years by playing with these magics. Then government got alert. Oh my God. I thought to motivate you, it's motivated more. So you're not paid even single penny. So calculate at least 18.5% on the adjusted total income. Adjusted total income means forgetting about these benefits. If you don't enjoy this benefit, your income is 100. If you enjoy the benefit, what is the income? That's a normal income. Between these two, whichever is higher, you have to pay. At least pay me 18.5%. Don't pay the regular tax 30. I have given a waiver. Because of the waiver, you paid nothing. Okay, I ask you pay at least 18. That is called alternate, at least minimum tax you have to pay. Hope you will be now able to understand. The AMT rate being 18.5% on adjusted total income. What is called adjusted total income? In the absence of these benefit, what could be the income? If I don't have the income, then AMT not at all applicable. If you don't have this income, okay. Then, in case of cooperative society, 15% will be the AMT. In case of units located in IFSC, what is called IFSC? International Financial Services Center. Okay. While paying the money in bank account, you will expect about IFSC code. That is called Financial System Code. Indian Financial System Code, I think. Okay. IFSC. In this IFSC is totally different. This is in International Financial Service Center. If foreigners wants to buy the shares in Indian market, how can I buy? Okay. I have the dollars and euro and some other foreign currency. I want to invest in India using those currencies itself. Okay, then government is very happy if you are investing in dollars because it's non-printable in India. So inviting all the investors who wants to invest in India in dollar, a small space is open. That's called IFSC. In India, we have IFSC in Gandhinagar, I think so, and Gujarat. One IFSC center where the foreigners can invest their money in their own currency in India. For them, lots of benefits are given. Lots of benefits. Even they can purchase the shares from Indian market using their own currency, IFSC currency, in IFSC. Okay. So for them, the tax rate is very, very lesser. It's only 9%. derives income solely from convertible foreign exchange in that location, IFSC, then it's 9%. So adjusted total income is nothing but total income, and add back the deductions enjoyed under this. Of course, ATP will not be applicable. But under section 35 AD, if the asset purchased for 100 lakhs, how much you can claim the deduction? 100 lakhs can be deductible. Am I right? While adding back, this 100 lakhs is you are adding, but it means in the absence of 35 AD, what is the profit? Because of applying 35 AD, you claim 100 rupees deduction. Now you have to add back. But if you don't claim section 35 AD benefit, this capital asset can be subject to depreciation, right? So if the depreciation rate applicable for this being 15%, that 15 lakhs can be added, subtracted. While adding the benefits you enjoyed because of section 35 AD, don't forget to enjoy the benefit for the depreciation. You can subtract this. So, but depreciation under section 32 can be claimed if asset debited under section 35 AD. Hope you will be able to now understand this. Provisions for advance tax interest are applicable as usual. Now, this one is not applicable under default tax regime, so it's outdated only. And the default tax regime under section 115 BAC, this alternate minimum tax is not applicable. Why? Already we are not eligible for section 35 AD and other things also. We lose all these benefits because of having default tax regime. So the tax becomes very simple. Next year it seems to be still simple. Okay. So don't expect that can I go for the examination the next year. As the tax becomes simpler, it becomes simplest to all the students, and the competition will be very high then. Okay. If the question paper is tough and you can play with few students. If the question paper is easy, then all the students will be preparing seriously and it will be very tougher. Right. So this will be applicable for individual, Hindu undivided family, AOP, BOE, AJP, provided that adjusted total income is more than 20 lakhs. If it is less than 20 lakhs, not applicable. Individual, HUF, AOP, BOE, AJP. Calculate the adjusted total income. If it is less than 20 lakhs, this provision will not be applicable. And if you go for default tax regime, it's not applicable. And if you don't have income under this special provision, you are not eligible for this special provision, then also you are not enjoying this benefit. Okay. This AMT will not be applicable if you go for default tax regime, or if you are being individual, HUF, AOP, BOE, AJP, where your ATI, adjusted total income, is less than or equal to 20 lakhs, it's not applicable. And you don't enjoy the benefits under section 10 AA, 35 AD, or 80H to 80 RRB, except 80P. Okay. Then also you are not eligible for this section, not applicable. Now find out the regular tax. Find out the tax under section this one. Between these two, whichever is higher will be taken, and on that health and education cess will be calculated. Now, alternate minimum tax under section 115 JC is applicable for the assessee other than companies, individual, and all these people less than or equal to 20 lakhs, not applicable. See, GTA deduction under section 80C, 80G, 80IE. You have to consider only the IE series. Okay. Here we don't have IE. What about the AMT applicability? Not applicable. Here we don't have. These deductions okay. G and C all okay. What are the three deductions? 10 AA, 35 AD, and 80 from H to RRB except ATP. Okay. And of course here we have. Then we can find out what? Okay. So these two are LLP. In case of LLP, always applicable. Here applicable. In these two cases, not applicable due to non-available of these deductions. Okay. LLP case always applicable if we have the special deductions. Is that okay? Now find out the adjusted total income. You have to add this one. So add these two. Total income plus the deduction under section 80 IE. What's the value you are getting? 7.75. 13 lakhs 75,000. Here not applicable. Here 8 plus 16, 18, 26 lakhs. Okay. Here 13.75 lakhs. These are individual. In case of individual AOP, BOI and all, if the ATA is less than 20 lakhs, then also not applicable. Here it is applicable. In these two cases, it's applicable. Total income, adjusted total income in this case being 26 lakhs. Here 7 lakhs. Find out the regular tax first. A regular tax. Regular tax will be calculated only on. Oh my God, I made a mistake, I think. Okay. Oh, this one is total income only, no? Correct. Okay, sorry. This is total income. You have to calculate the tax on this 18 lakhs. For individual, 18 lakhs means 0 to 2.5 lakhs, nil. 2.5 lakhs to 5 lakhs, 5%. 5 lakhs to 10 lakhs, 20%. 10 lakhs to 18 lakhs, 30%. 2 lakhs 40. What's the overall value? 3 lakhs 52,500. This is regular tax. Now, what is the AMT? 18.5% on adjusted total income. For 26 lakhs, calculate 18.5%. 4 lakhs 81,000. This is the minimum tax he is supposed to pay. Then 4 lakhs 81,000. Whichever is higher will be payable. With that, you can add the health and education cess and all. Yeah, 5 lakhs 240. Here, regular tax on this LLP 30% flat rate 1 lakh 50. And for this 18.5% will be calculated 1,29,500. Between these two, whichever is higher, 1,50,000. Health and education says at the rate of 4%, and this being 6,000, 1,56,000. Clear? Anyhow, it's outdated one. You can just have the idea about AMT. One more point. For all other cases, only regular tax is applicable. Okay, in all other cases, regular tax. AMT will not be applicable. You can calculate the regular tax. Suppose Mr. X, as per the regular provision, has to pay only 3,50,500, but he paid 4,81,000. How much extra he paid? Hmm? 1 lakh. So Mr. Y says, sir, I paid 1,28,500 excess due to the application of AMT, sir. Okay. Is there any relief for me? Yes, of course, I will give the relief. What's that? In the subsequent year, due to the application of AMT, also your regular tax seems to be higher, like BLLP. In the next year, in case of Mr. Y, you know, regular tax is 6 lakhs, AMT tax is 4 lakhs. Now tell me, how much he has to pay? Whichever is higher, 6 lakhs has to pay. But this Y last year paid excess amount due to the application of AMT, no? Excess by how much? 1,28,500. That can be claimable as set off in this year. Then 4 lakhs 71 500 will be the final tax is paid. So whenever he pays more tax due to the application of AMT subsequent period, if the regular tax seems to be higher than the AMT, then earlier the excess payment can be adjusted while paying the regular tax in this year. Hope you will be now able to understand. Tax credit for AMT. If the AMT is more than regular tax, the AMT tax minus regular tax will be considered as AMT credit. Set off the AMT credit for 15 succeeding assessment year, provided if the regular tax is more than AMT, that positive number will be adjustable. So that extent of 2 lakhs can be adjustable. Here, the excess amount is 2 lakhs now, this entire value can be deductible. Suppose if it is being 4 lakhs 50,000, AMT being 4 lakhs, and you have to pay 4.5 lakhs. Excess, this is AMT, this is regular tax. You are paying 0.5 excess than the AMT. Then this amount can be set off to the extent of 0.5 here. Balance 78,500 can be carried forward for the rest of the year. Up to 50 years you can carry forward. Hope you will be able to now understand the complete provisions for AMT case also. Okay. Do a constant revision and finish up book bag problems also for this topic. We try to have 2 days seminar to have the revision